Well, hello everybody. It's midweek update time. Joe with you here. It's the 30th of July. Interesting to see that we've got tomorrow and then we're already into August. Now keep in mind, folks, we are still in summer trading. So we expect things to be a little bit lighter, and they kind of have been. These markets have been floating up for quite some time. And guess what? We're into a Fed day. With that being said, you guys know how this works. Take responsibility for what we share, and let's enjoy the course.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So what's our current market outlook? It really hasn't changed. It's been difficult, but it's been pretty cool at the same time. We've had this +1 for a little bit as we continue to push highs and break highs and push highs and break highs. But I'm going to roll back to what I said earlier, folks. It is summer trading. This is very common. Not a lot of activity. Things tend to bleed higher. There's some optimism out there. The markets are looking pretty steady and pretty strong. So we've got that monthly outlook at +3, and there's just really no way around it. Now, there's always the fear at tops, and we've had this discussion quite a bit over the last few weeks. In fact, Rob made mention of it yesterday in the end of day, saying that, look, guys, we got a little bit more that we're risking to try to squeeze out those last couple of drops of this extended move to the upside. It doesn't mean that it can't continue to stay stubborn and completely move higher. But it's not going to take much for the corrective action to come in. We are starting to see the markets absorb all sorts of news. At first, it was all the bad stuff, worries about tariffs and this and that. Now we're starting to see strength and stability, and the markets are kind of ignoring that as well, not really celebrating anything. So we did get some strong economic numbers today. In fact, last week we had some pretty good jobless claims. Jobless claims have been lower than expected for a few weeks now. We've got a steady economy. We've got an active retail sales number. We got an active consumer. We just came out with an ADP employment number that it was only 104 jobs added, but the expectations were a lot lower than that. And then the GDP number. We do get revisions. We'll have a first revision and a second revision, and there's all sorts of things to argue that, but 2.3 to a 3% GDP. There is, and then on top of which, folks, also the consumer confidence jumped up from a 95 to 97. We've seen the CPI and the PPI, both numbers in line, lower. So it's this tough thing to where, okay, well, the Fed, we know that the Trump administration really wants interest rates cut, and maybe it's the expectations of interest rates being cut that could cause, or that has caused this move in the markets. So we have this double-edged sword. But what's interesting about this is we do not have to know. We do not have to care. And this is a Fed day of all Fed days that we get to discuss. There are days in the markets you just don't trade. There are areas in the markets you're better off just keeping your money safe. And so we'll get into that quite a bit. But I mean, if you guys got trades to look at, please type them in. We'll take a look at them as well. So what's our overall outlook? It hasn't changed. The +1s have been doing really good. We just came out of an options expiration cycle last week, right? I think, was that July's? Yeah, I think it was July week 3. Maybe I'm off by a week. Sorry, folks. It is summertime. However, what I noticed is the majority of my sideways stuff seemed to do better than my +2s and my -2s. So what else do we got? I know I'm spending a lot of time on this slide, folks. Sorry, but we got earnings tonight, and that's just another thing. We got Microsoft, Meta, Robinhood, Carvana, eBay. Those are the big ones just for tonight. But tomorrow and the next day we'll have all sorts of big tech companies, so on and so forth. So we're kind of poised in this area of if the markets really want to take a hiccup or you'll see some scalping or profit taking, this is kind of a prime area to do it. And let's just kind of break that down. So the movement for today is exactly what I would expect it to be. It's a Fed day, right? We know these. But these consolidations, open, lower, here we are high, now we're down, now we're flat. So up, down, flat going into the announcement. We'll see where it goes. Sentiment is all of this. What the Fed says, now the expectations are for no change in interest rates. So everyone's going to hang on every single word of, I believe, what Fed Chairman Powell comes out and says what they're looking at. We do have more jobs numbers coming out, I believe, Friday, and those will probably be implemented in that as well. However, we do have an administration that might cause some tweets and say, look, this guy's up in the night, we're having problems, I hate him, I love him, I don't know, but it could create a little bit of push and pull. Now, it doesn't matter politically on what side you're at. Let's take a look at this objectively. I know we look at the advanced decline line. Right now, it's showing a little bit of caution, about 50-50, and then above below the 50-day moving average is still at 70-30. I've even seen it as high as almost 80-20. But let's talk a little bit more about probabilities and possibilities. So I wanted to spend this time to take a look at the SPY. This is a day that I'll just tell you straight out, folks, I am not making trades today. I'm not looking for new trades, and I'm not going to place new trades. So let's take a look at this. Extension, a little bit of a move. We've had a little bit of a push and pull yesterday. We made mention of that, saying that, we had some good news come out and markets just kind of absorbed it. Really good optimism when it comes to some negotiations with Europe when it comes to these tariffs. Good stuff that we've been waiting for. I mean, think about this, folks. These markets have been waiting for this since January. And all of a sudden, we've got a really good negotiation going on and no one seems to care. Well, it's pretty obvious because anybody that cared was back here. So when you're off the bottoms and you're sitting on this much profit, and folks, I mean, think about your 401k over the last few months. Think about your friends and family saying, hey, I can't believe the percentage I'm up just since April. That's comfort. That's complacency. I've got confidence. I'm not worried anymore. None of this bothers me. And then you see some of these economic numbers. We're spending, we're buying, we're expanding, we're growing. Everything's kind of in this uncomfortably nice situation, and the markets don't stay there for very long. So until we get that catalyst, until we get that fear, until we get that greed of where I need to pull some profits off, we could expect kind of the same continuation. So there's my soapbox in 2 cents. Now, we don't want to go ahead and try to short this stock, or excuse me, this market, because it can still slowly bleed that away from us. However, this isn't the time to let's just load up and put everything I can on the bull side. Now, I'll go one more time, folks. Let's go to the Qs here because I want you to kind of pay attention. This is a lot of what I do a lot is I find out, okay, did I have a successful expiration cycle or month? I don't have everything expire on the third Friday, but I'll take the look at my portfolio every 4 or 5 weeks. And I'll say, okay, did I do good? Okay, if I did good, great. What did the best? This last month, I did pretty decent. But the majority of my decent trades were sideways to slightly higher. They weren't my plus threes and they weren't my minus twos. They were sideways to slightly higher. Almost every one of them came in. So that tells me that's the situation I'm in, which means if I'm looking for a plus 3 this week or next week, I'm probably up in the night. So it's a cautious approach. A couple things to think about. We're in summer. Now, this is a tough day because this is a Fed day. Here's the Qs kind of doing the same thing, floating higher. We are seeing some earnings that are good. We're seeing some earnings that are bad. And we're also seeing stocks that are treated as such. So that's what I've got when it comes to just today. Now, past that, guys, it's just taking a look at some charts. I see 1 or 2 pop up. I really don't think I'm going to be very active. So this might not be our best class, but let's get started here. Real quick, before I do that, why don't we jump into our groups and find out what's going on today. Okay. So our weekly performance, we got kind of this mid area. Tech's got 1.55%. Energy, utilities. I know this move off the bottom in both these sectors is big. Technology could be 1 or 2 earnings announcements, or I should say results. Basic materials sliding a little bit, which is interesting. Usually I see energy and utilities with materials at the same. They're usually closer together. But what this just shows me is when I go up to the 1-day performance, it's a lot of stuff moving off the bottom and maybe some stuff being scalped off of the top. So not a lot of direction in here. Usually if it's a bull market, the week performance is green and the day performance is really green. Or bear, the week is a little bit red and the day is very red. When I see push pulls, it's more of a consolidation. So I'm not really going to focus too much on a specific sector for today, but let's definitely go through a couple of trades if you guys have them. So first off, let's take a look at BDX for Dave. Thank you, Dave. In the healthcare industry, weak sector, but it has it has bottomed. Is it a buy or a sell? Well, so let's take a look at this first obvious, and this bottom is great. So I'll give you that. Okay, it looked like it fell apart here. It had its earnings, it bottomed, and it's moving kind of slightly higher. A little bit of a slope here, but I do like this most recent activity. A little bit of a consolidation through that 170, 176 level, and then it decided to set a little bit higher of a high, a little ascending breakout to the upside here, and it looks like it might be retesting this last resistance. Let's call that 180. I know this is a volatile stock, so just give it a little bit more wiggle room. Overall, Dave, this would be something that shows a little bit of strength, gaining strength. So I would be privy to kind of see if this bull pullback can confirm and maybe move higher, or if you want to wait for it to get a little stronger, see if it can't break above that resistance. I do see something here. Let's see. Sorry, those lines are going to mess with you. Yeah, it looks like it's got its earnings coming up here in August, the first week here in a few days. So be mindful of that. I do like the pattern, though. The pattern is just showing a little bit more optimism. So I'll give you that. Now, when it comes to where it's going to go and how it's going to get there, if this earnings wasn't in the way, it would be a little bit easier to kind of play the pullback, confirmation, move higher, and I'd play it kind of closer to the hip there. You could also do this as a +1 trade, sideways to up. The problem that I have is these. Earnings season is a difficult place to trade. I like it. I like the pullback. Wait for the confirmation. Play it as maybe a +1 or a 0 if you want to play it. But I'm just going to go ahead and say, I like the pattern. This is enough for me to say no. Let it move aside unless you want to do a what's called an earnings play on it. Let's move to ASL or ASML. This is another trade here, semiconductor. This one looks strong sector. Wait to enter for a +1. Hopefully I got the ticker symbol right. ASML. Thank Dave. I don't like it because of it dropped here and it's trying to find a place to consolidate below its averages. The 20 starting to fall, the 50s flattening. This would be more of a sideways trade if anything. I wouldn't want to give it too much strength because it looks like it's just trying to stop itself after whatever caused whatever's in the earnings or the report. It looks like it's trying to find a place to settle. So maybe something sideways or bearish even. That would be my 2 cents on this, just based on the chart. All right, let's get into it. Gold. Let's play some gold here, right? We've got gold. If the Fed's not going to cut interest rates, do you think that makes gold weak? The way that gold is moving, it looks like the strength in the dollar, the stability shows that maybe gold's a little bit out of favor, but it looks like a pullback. But Josh is saying, hey, is this good for a bounce? How does it generally react when it comes to the relationship to S&P and economic stuff? Well, it's inverse to the dollar. So the expectations of the dollar continue to be strong. If Powell comes out, now once again, I'm just going to give you the black and white. What sentiment does and further thought of where gold will be in the future is up to sentiment. However, 101 says that if the dollar retains its strength, meaning if the Fed sees stability and growth in the economy in some of the numbers and says, look, we're going to keep interest rates flat, which they're expected to do, and says something like, and we don't think we're going to cut in September like we said we were, or which might cause its own problem, but I'm just giving examples here, saying that they see stability and strength in the economy, that will stabilize and strengthen the dollar. This should slide lower. That would be it. Gold is more of a flight to safety. If interest rates get cut and the dollar gets weak, expecting an economic slowdown, you'll see a flight to gold, and this would bounce. Now that is the quote-unquote, you go to school and learn it, Eco 101. I've seen them both go up. I've seen them both go down. It's all over the place. But yeah, I would keep an eye on this, Jaws. This is a great question. But let's watch the reaction based on what the Fed does and then what they say afterwards. Gold could probably fall really hard, or gold might have a huge bounce, or the dollar might run or fall. And it's going to be kind of, I think, a fun day. It should be reactionary into tomorrow. But I guess since I'm just babbling out loud, overall, what I want you guys to take from today is not a day to make a decision on new trades. Okay, let's get to Schwab. for Todd. Okay, earnings are out of the way, and there was a gap up with earnings. Okay, yep. These are the continuation plays. Okay, it came out, seemed to do pretty good, seemed to be pretty accepted, and it seems to move higher. So after a chart or price action creates a gap, they refer to, I always like to say that a gap is a reset. I'm going to go back to charting 101. Doesn't know if it's right or not, but this is kind of the theory. A gap up, and it's usually off of the open and close. I do like to use the highs and lows. We'll do one of three things. This is this is an open gap. There is a closed gap, right, where it will retest this and then move higher. And then there's a runaway gap, which this basically almost is, which is it never retraces the lowest point and just takes off. So out of the three, this is a open gap, because you can see that, that you could see that this did retest a few times. It tried it this day, almost hit it there, hit it here, hit it there. So this is a open gap. It's tested it, but never really retraced. This is a strong pattern. Now it feels a little bit overextended, right? So I'd be looking for more of a consolidation here. And once again, this is tough because I can compare this to the overall markets. Overextended, we know it's there. It had good news. That's awesome. But at some point, it's going to have some sort of a correction or consolidation. So if you want to just put on your watch list and see if it consolidates, I think it's great. Digital Realty Trust, this is for Garth. On a bull pullback, real estate sector also about to break out? Question mark? Yeah, it might be. So what does that mean? Well, let's take a look at this chart. A little bit of an ascending triangle pattern here. I do like it. Let's see if I can draw some lines. It looks like it broke out of resistance here a little bit earlier. It's kind of retesting it, more of a consolidation. You do have resistance there. Now, I'm just going to dial it back once again. If this is something that you kind of want to push into over the next little bit, I would keep it a +1 or a 0. I've just found, at least personally, my success with it. Even the stronger charts tend to maybe hover around areas. So I imagine this is going to test that 184 area. But today's not the day to make that decision, because if interest rates change at all, or the expectations of them affect this moving forward, you might see a little bit more of a violent reaction. This is Dutch Brothers. Okay, consumer cyclical. You guys have all seen these. We've got them here in Utah. And okay, let's take a look at Dutch Brothers here. I like the trend, kind of falling apart. Bearish crossover here with the 20 and the 50, setting lows, higher lows, lower lows, lower highs. Now it's playing with the 200-day moving average. You do have a pretty good support area at this area. You can see where it actually did, what do we call that? An inverse head and shoulders, right, folks? Look at that bad boy. So it's starting to toy with it. I think this $58 mark's probably pretty big for this. Be patient. Here, easy enough. 0 to -1. Maybe play something like that. Let's take a look at where we're at right now. Just consolidating, and that's it. And I imagine we're just going to pretty much consolidate going into the Fed meeting. A couple things that I would suggest before I cut you guys loose here is just look. If there's trades that you want, that you like, that you think are cool, let's wait. Give it a day or so. I've been reducing my positions, pretty comfortable with where I finished expiration of July, and I'm not really looking to throw darts right now. I've got my excitement. I'm expecting things to happen, but I'm sure as heck not putting money behind it right now. So let's just see what goes on. Let's see the reaction. And then we got a whole slew of earnings. Remember, folks. All right, guys, I think that's all I got. Thank you so much for sharing. Bye, everybody.